Hey guys, this is Adam from Dodgit.com and this is your video briefing for the 15th of October 2009. Well, basically things are going according to plan. The indices are just continuing to climb higher. This is absolutely amazing. And funny enough, this recent rally, we've had a rally for quite a long time, but the recent couple of weeks have started to become a lot more broader. And what do I mean by that? Well, up until now, we've basically all the time been looking at the technology sector or the financials to lead the way higher. And now what's been happening is that the Dow Jones, the S&P 500, they're really starting to climb. Look at this. We were yesterday on psychological resistance of 10,000. Now, in our previous video, we talked about this resistance level around here. We stated that we're probably going to consolidate around this area. We were wrong. Look at this. We just blasted through it yesterday on good earnings. JP Morgan came out with good estimates, with good earnings. Intel came out with better than expected third quarter, and basically the major stock indices just rallied higher. Now, in addition to that, economic data came out slightly better than expected. Basically what's happened is that we're continuing higher, we're continuing on our trend higher. We've now broken up above the 10,000 mark. Now, what I normally, or this is at least according to experience, I normally find that the first breakout isn't a real one, and what could basically happen is we could receive a down session today, and what traders and investors are going to do, they're going to start to test the breakout to see if it's a sustainable one. And basically what could happen, don't be surprised if we receive one session or two sessions that are negative before we really start to rally higher. Yesterday was also characterized by high volume, which is a very, very good sign. It does look like the indices want to continue forward. We still are bullish on this market, and obviously if we receive a full candlestick above the 10,000 mark, so then obviously we're going to start looking for a lot more long positions. We are already in a few. I'll just give you an example. This stock is CLFD, Clearfield. Now, we took this on one of the dodges 2 days ago, and basically gave a nice rally yesterday. Now the trick here, when trying to find stocks in such a bullish market, and we've had a real run up at the moment, so the trick is to try to find now stocks that have slightly pulled back, like this. We can see it here, slightly pulled back, and now it's starting to rally higher, backed by the major market. We can see, just for an example on this, this is an excellent example. We can see we had our trend line like that, and we came down to touch it. If we also let's just erase this line for a second. If you also just plot another trend line going down, you can see that we had this triangular pattern, and basically it just broke out yesterday and continued higher. Now the main idea, I'm not saying take this stock has already started its run up. So, you know, obviously for those of you that are thinking of entering this stock, it's a little bit too late unless you're going to receive a nice pullback to the 420 area. But basically the main idea is just to look for stocks that have received a nice pullback. They've had a nice rally since May, June, July, like this one has had, and they have pulled back on the recent pullback of the major indices, or basically as the major indices have now consolidated over the last couple of trading days before their breakout yesterday. So you're going to be looking for stocks that have also used that consolidation as a weakness to then take it higher. Now what I'm going to do, I'm going to just flip over to a few forex charts like we normally do, and basically the euro against the dollar has broken out. It's now retraced today, so that's why I'm also thinking that stocks are going to retrace a little bit. Now euro dollars does look like it's heading higher, but I think after such a rally higher like we've got here, hang on, let's just zoom in on this, such a rally like we've got here, I think we're going to receive a little bit of a pullback, and that pullback might be to its recent high. So we're talking about roughly around 1.4817. Now, as we are not that far away from that level, what could basically happen is we could consolidate 1-2 days, and then it's going to really depend on earnings from the US. Obviously, if earnings from the US are going to pull the stock indices higher, so then this is going to also continue higher. If the indices are going to start to consolidate around their current levels, so then what I'm thinking is that this will also, the euro against the dollar will also consolidate around the 1.488 mark. Moving on to the next chart is the pound against the dollar. Now, in our previous video and also on the chart analysis page, we did state all of this. We mentioned that we've got two support levels around here. We've got one support level around here, one resistance level around here, and we've also got a trend line going lower like that. And we did state that if we break that level, we're probably going to receive a nice bounce higher. So basically that's what's happened. Now keep in mind that if you are in this trade, you've now hit resistance, and what could happen is we could receive some weakness around this area. Again, what I want to just show you is like this. We've got this big consolidation area around the whole of the 166 to 158. We're talking about roughly around a 800 pip range. Now, what I also want to show you, I'm going to just zoom out a little bit on this chart. I'm going to flip over to a weekly chart. And what I want to show you is something interesting that we've been observing. Look at this pattern around here. Now, this is a cup and handle pattern. And basically what it normally means, it normally indicates that the trend is going to continue to the upside. So this is something that you want to watch out. If you are trading this at the moment, keep a close eye out on the cup and handle. You've got the handle around here, you've got the cup around here. It normally indicates upon a break of the upper trend line that we're going to receive a further continuation. If so, obviously take into consideration you've got resistance of 1.6744. If we do clear that, then the lines are as follow. The next and final chart I want to show you is the New Zealand dollar against the Japanese yen. This is basically just breaking out now. It's already started to climb. So for those of you that are in front of the screens, I hope you caught this. We have resistance roughly around here. Now we have a gap around here, which probably we're going to fill it. If already we're starting to climb higher, 66.90. So then, you know, obviously we're going to fill this gap. For those of you that have missed the trade, I don't know. I'm not a person that normally runs after trades, so I, normally just look for something else. For those of you that insist to go on this trade, so then I would wait for a pullback at least so it will come down to below 67, 67.70. Obviously, if you're thinking of taking this higher. So to summarize it all up, basically, major currency pairs, stock indices, they all still look good at the moment. We've still got this nice bullish market going. Make sure you try to time your entry points according to the market and don't just rush into any trade like this. Obviously, for those of you that are now just looking at this trade, so then it is a little bit too late. Remember, time the markets, write down your trades, do your analysis beforehand so you know when to enter. Hope you enjoyed the video. My name is Adam from Dodgit.com.